we're great to have Tom from ARK Invest today with us, and welcome here.
Thank you.
And so the first question, so we know that ARK Invest is a big shareholder of Bitmine, and so what is our general thoughts on DATs and Bitmine?
I think when you look at the DAT space, one thing is that there was such a proliferation of DATs, but this really is a winner take most space within each of the assets that are focused on. We saw such a proliferation and we saw such a spread of capital. And I think as we've had this pullback in crypto, which you've already started to see, is that there's inevitably going to be consolidation. There's going to be consolidation in which some have capital to make interesting transactions. You also have consolidation in which some of the largest accumulators of the particular asset are going to be in a position to add more value, to drive synergies, to create products and services that leverage that position. Where as the market comes back and comes out the other side of the cycle, smaller, worse positioned are really going to be far behind. And so, relative to the ETH space, we look at Bitmine. Obviously, they've been pretty clear. I think that leadership has articulated very clearly what they've been doing in this downturn. They've obviously continued to buy. They announced again this within the last week.
And Mr. Beast,
Yes, they've announced.
400 million.
That's exactly right. They've announced additional strategic capital. They have announced the deployment of that capital as well. And you see some within the ETH space in particular, very few able to compete in that. DATs, whether it's ETH in the case of Bitmine, whether it's any of the other digital assets, scale is going to matter to find the synergies, to find the opportunities, and I think also to survive the inevitable consolidation that you're going to see. Some of those at very attractive prices and entry points for the acquiring firm. And so, for that reason, relative to ETH, certainly Bitmine is well positioned.
So you think DAT is going to be coming back soon?
Soon, it's not immune from the market cycle, right? Crypto as a whole, obviously, I think as we're talking right now, I think Bitcoin is about 67, 68,000
Around that.
as we're sitting when this is being filmed. I don't think you're going to suddenly have DATs and DATs front run that market, right? I don't think they're going to be the leading indicator. They're not immune from the broader cycle, either within crypto or within the full financial system. There are a lot of things right now where the marginal dollar has to look at from both an investment, a trading, and a speculative opportunity. Prediction markets certainly are very much right now, even speculating relative to derivatives, options, futures, ETFs in the metal space has obviously captured the market's attention for the last couple months, and we've seen the results of that. You're not going to see DATs. You'll be the outlier in crypto. They're going to be part of the ecosystem, but as the ecosystem matures, the fundamentals, right? I think here consensus, you've heard a lot. The fundamentals of the industry, there's a lot of really great examples, a lot of strength, a lot of positive outcomes. When that comes back into the asset price, you're going to see the winners truly emerge. When you were in a bull market and when you were near all-time highs, a lot of DATs could attract capital, could do well, could have premiums in the share price. When things are going up, it's more difficult to identify the leaders and the best position and the winners. It's in times like this where we have the pullback that there's a natural cleansing and natural consolidation. Some of the weaker, less fundamental, less well positioned, smaller, go away. And I think that that's the part of the cycle that we're in right now. I don't think you can put a time on that without talking about the broader macro and talking about the broader crypto industry. But as that comes back, you'll see a small collection of DATs within each of the assets that are well positioned to also benefit.
But are we going to see some cooler synergies between maybe DATs and AI? Because we're seeing AI is attracting a lot of capital and attention from the capital markets.
I think you need to identify real synergies,
Right.
right? I think there's a risk relative to the conversation around AI right now as well. We've certainly seen in the equity markets that AI has gotten a premium. There has certainly been strong investment in both public companies that are involved in the AI space as well as private names as well. Have certainly attracted lots of capital. Some of those valuations in parts of that ecosystem have gotten very high. Other parts we think are accurately representing where AI is and with a lot of growth left. So even within AI, it's very difficult. It's dangerous to actually paint with such a broad brush to say that all AI is equal because
Mhm.
clearly we don't think that's the case. But in the equity markets, as much as you've seen capital and valuations accrue to that space, what you've also seen is that the market is on the hunt right now for what sectors, what industries, what companies might be disrupted. And those companies are being punished. Those industries are getting hit. We've seen sell-offs in all sorts of industries that the market is suddenly waking up to the possibility of disruption. That's again are not immune from the broader economic, the broader financial landscape. So companies that present a clear strategic plan can articulate the synergies, how they're actually going to use AI to the benefit of ultimately their shareholders and to generate a return on that capital certainly are going to get a premium. Now, we think that, again, this is a winner takes most market. The companies with the scale that have the ability, have the largest reserves of the currency that they're focused in are very likely to be able to also afford and deploy and find synergies with AI than some of the smaller, less well defined, poorly positioned. But it is going to be imperative that AI is not used as a buzzword to try to get premiums with no plan, no strategy, no clear articulation. That could end in tears for investors if AI is a buzzword. But if AI is strategically utilized, and again, we think scale is going to matter because scale is going to lead to scope. Scope involves bringing AI from a synergistic standpoint, and then you're going to see a small collection in the various digital assets that have staying power and true fundamentals be well positioned to also benefit from AI because AI is seeping in and benefiting or has the potential to benefit every industry, every company in the world if it is deployed in a strategic manner.
Great. Now, one last question. Speaking of AI, we know that ARK Invest is also a big shareholder of Tesla. How bullish are you on Tesla? Like Elon Musk's, yeah, he's developing the Optimus, right? The
Yes.
Jason, I recall that Jason from All In podcast. He was like, "Whoa, I saw the Optimus 3,
Yes.
and you guys are like very bullish on Elon."
Yes. Well, we own a number of Elon companies. I mean, you referenced Tesla. Tesla, by the way, we think in many ways is the largest AI company in the world. If you think about obviously the data that they've been able to collect on the miles, the storage, the supercompute, effectively that is driving around on four wheels.
They actually stopped manufacturing some of their like Model X
They
or
did,
whatever.
yes.
Yeah.
They ended the production lines on two of the models. And, you know, in a way, that's a good lesson for companies right now. We're in an AI age where the world is changing so fast that focus is going to be incredibly important. If Tesla was a traditional car company, they'd just keep making those models. They'd probably double down. They'd put a new model year on that, and they're a car company. They'd make the newer version of that car. Maybe they'd make an aesthetic tweak,
Mhm.
something to try to reinvigorate sales. Maybe they'd make it go 5 miles an hour faster, right? That's what car company would do. But Tesla's not a car company. Tesla is looking at the long range, obviously, from a supercompute standpoint, from a data standpoint. Obviously, humanoid robots are becoming a bigger part. You know, their long-term value creation is about autonomous driving, self-taxi fleets, humanoid robots. I mean, this is a company of the future, not of cars that we could buy today. It's obviously an important part of the business. There obviously is some volatility in that core existing part of the business. You know, we don't want to ignore that. But in terms of the value creation, there's a reason we say it's the largest AI project on the planet. And of course, that's before you even talk about things like energy storage. And energy really is a topic that
The
as
center.
much as AI, exactly.
Yeah.
You can't have an AI conversation without an energy conversation as well. Now, relative to the Elon Musk comment, you know, people know us perhaps more for our public equities. We have, you know, we have ARKK, we have the ETFs. Certainly Tesla's been a major holding. I'm not sure everybody knows, though, that we offer available to all retail clients in the United States, at least, and growing that across the global footprint rapidly, a venture growth private equity fund that has the rest of Elon's companies in it as well.
SAI?
So we owned SpaceX, XAI, Neuralink. We had X before XAI merged.
Yeah.
So we have the ARK Venture Fund, which is an interval fund, but it's available for all retail investors in the United States.
Wow.
It's available right now through a number of their advisors. If they have a financial advisor, they can ask their advisor about it. ARKVX is the ticker that they can look up, but it's also available direct to consumers on the Titan app, or SoFi has the product available. $500 minimum investment. We have about 50 private companies. Elon's companies are some of our. We had clean direct access to SpaceX, to XAI. Obviously, that's been in the news recently.
That's very good deal.
We have OpenAI.
Yes.
We have Anthropic. We have Databricks. So we have, from an AI standpoint, we have obviously from an Elon standpoint, I mentioned Neuralink is in the portfolio as well. We have some drone companies. We have Figure AI. We have Axiom Space. So we have really the innovative themes that you know us for. It's about between 80-85% private equity, but no accreditation, no qualification for as little as $500. You can access the fund. It has liquidity, outflow liquidity on a quarterly basis, daily inflow. And so we think Elon's companies, think these AI companies, it's always a little disheartening to hear people think that they're going to have to wait for some of these companies to go public before they, as average investors, will be able to get access to it. It's one of the things that has drawn them to crypto was the democratization. They could get access no matter who they were, for how much, or no matter their ability to invest was. That was one of the huge movements behind crypto digital assets. From our standpoint, we were always so disappointed to hear people who knew these great companies in the private space, but couldn't get access themselves. They were not wealthy. They're not an institution. Even if they were, these are very closed, small deals. We said we want to do for that space what mutual funds did for public equities 40, 50 years ago. And so we're really proud of that. And since you mentioned Elon, and because those companies, SpaceX, are such an important part of our portfolio, but of the ARK Venture Fund. I wanted to highlight that as well.
ARKVX.
It's ARKVX.
ARKVX.
It's not listed, so it's not an exchange traded. So you don't buy it that way. But again, it is on SoFi and Titan. It is through U.S. financial advisors. We're working to bring it globally as well in a number of markets. If you're watching from a non-US standpoint, or if you have access to those platforms. But again, it's about some of the same core virtues that crypto is about. We want to democratize and open up the access for all investors to these companies. They should not be kept out just because of their financial wealth and the size, but in a diversified, audited, fair price kind of way with liquidity. So, these things are all converging. It's appropriate that we're at the consensus conference. It's appropriate that convergence has been a huge theme here. When you look at crypto and blockchain, when you look at AI, when you look at asset classes like private equity, there is a broad movement afoot. From ARK Invest standpoint, we're extremely proud to be a part of it. It's just the beginning. We're working on a number of things to make this asset class in crypto more accessible, to make private equity, venture capital more accessible, but also to bring out those asset classes in a way that fits for all investors. So we've worked outcome volatility, so lower downside version of ARKK, for example, we rolled out in the last couple of quarters, so that people, if they want to invest in ARKK, but they want it with downside protection, they have that. If you want access to Bitcoin, of course, we were part of that. There are some announcements relative to multi-coin funds that we're working to bring that as well.
Multi-coin. Kyle's money. Leaving Web3.
Yeah, well, I mean, I think the industry needs to get to a point where, from a financial standpoint, they have a North Star that as a reference asked performance. If we all go back to the first finance thing we ever learned, you can't have alpha if you don't know what beta is.
Yeah.
Right. And also people say things like, well, I'm overweight Bitcoin. But overweight relative to what? What would you have been neutral? What is neutral Bitcoin at, right? And the problem is we have not yet. The industry still treats Bitcoin as beta.
Yeah, it's like the beta, right? The
It's
overall
beta.
market.
Everybody says, well, Bitcoin did this. That's beta. Imagine if we said that about public equities. Well, NVIDIA did this, so everything else over underperforms. Well, we would never say that, right?
Never.
That's an asset, not an asset class,
That's a part. Yeah.
right? One of the things, and we're hearing it, ICE made announcements, ARK made announcements. One of the things we're hearing is that, it's a topic of conversation at the conference. We've got to have a more reference. But going back a long way, the Dow 30 was instrumental to people owning public equities because they had some comparison, not only in things they thought would do better than that. And so they actively made alpha choices of buying additional names or going heavier than what the benchmark said. It was a way to express an opinion relative to some sort of 0 point, some neutral standard. Obviously, the Dow 30 is still shown on CNBC and Bloomberg, even though nobody really invests in it, because that's the power of a standard, of a starting point. Obviously, today it's much more about the S&P 500 if you're talking about U.S. equities. But in every other part of the financial world, we have some comparative starting point, right? If you want small cap US stocks, you buy the Russell 2000. If you want non-US stocks, you buy MSCI All Country World Index. If you want emerging markets, it's the MSCI Emerging Market Index. If you want volatility, it's the volatility and the VIX,
Six.
right? If you want the dollar, you have the DSY, right? And so everything else we have that, right? In crypto, we just say Bitcoin, but Bitcoin's the asset, not the asset class.
That's a class.
We need beta badly in this space. People may still say Bitcoin's the best, but now they're saying it's the best compared to something instead of this amorphous, we don't know what it is. We're saying it's better than everything and nothing at the same time. That's going to be very important. So I see that as one of the moves. That is clearly a topic of conversation here at the conference. I think that when you have a pullback in the space, especially Bitcoin, that's an excellent opportunity for this to come in, because when things are going well, there's no incentive to change. People don't want to screw it up. Obviously, you'll have traders that are more focused on other parts of the market, but they're not. But the wealth management, the longs, the investors, you're not going to rock the boat. Things are going well. You're making a lot of money. It's when you have turbulence in the markets, when you inject a period of risk off, you have an incentive to do things differently. You have incentive to critically evaluate what it is you've been focused on, how you want to set up your asset construction in the future moving forward. And I think what you're going to see is certainly Bitcoin's going to be the largest percentage of most holdings for most long-term investors. I don't think that's going to change, but it's going to be in reference to something else with an easy single access way to get the rest of that, to get some standard. And then if you want to go overweight one thing, two thing, you want to be overweight Bit and ETH or Bit and XRP or Solana, whatever it is, now you can express that. That also allows active managers to come into the space and demonstrate the value of their fundamental research, of their picking, of their trading. I mean, at its core, ARK is a research-driven, active shop. So for us, this is really about the journey. We know we need to establish beta so that we can start to demonstrate alpha. It can't be Bitcoin. But at the end of the day, we want our research to speak for itself, our portfolio. So these are steps on the journey. This is a long term. The belief is very strong. Everything we've talked about, in this session is about really long term, strong conviction and fundamental outlook. There might be volatility in the short term. There might be steps on the road to where we need to get to, but the conviction and the size of the opportunity is unwavering.
Pessimistic is always correct. Optimistic wins.
That's right.
Okay. Great. Thank you, Tom.
Thank you so much. I appreciate it.
Pleasure.